Hey, hey Scott.
Hello.
Thanks, Jamie.
Hey, Steve. What's happening? Scott, thank you very much. Yeah, well, as
Kind of a
we,
goofy week. Like Scott said on the onset, kind of a goofy week with a holiday coming up right smack in the middle of the week on Wednesday.
can you remember the last time a holiday fell right
Seven
on?
years ago. seven,
Because
seven
usually,
years ago, we probably had a July 4th Wednesday.
we're usually taking the Monday or the Wednesday off. That's usually the way the holiday circuit works, but no, not this time. Right in the middle, and makes for a very
Hey,
strange.
while we're on it, just reminder everybody, tomorrow is going to be a real light day as well. It looks like the New York markets have used their option to deploy a half a day as opposed to a full day because everybody is going to be out the door after lunch looking for July 4th venues. So tomorrow is a half day market. It's going to most likely close, I think, 1 p.m. Eastern, 10 p.m. Pacific. And that's enough to put it in the books as a valid trading day.
Mm-hmm. So, strange week, and then boom, the market's open Thursday and Friday again, but you never know. Could be real quiet. Could have some anomalous events. You just never know. But we will find out. So, in any case, welcome to another edition of the Office Hours. I'm Jamie, and Steve is riding along shotgun as always. And we're already into July with the holiday coming up. Wow, time flies. So, let's do this real quick. Just want to get through the legalese here. Just want to make sure everyone in attendance knows that the information that we share with you all is for educational purposes only. If you do need investment advice, what to buy, when to buy it, all that good stuff, please seek out a registered investment advisor or some other licensed individual that can legally help you out with that type of stuff. All right, and for the new people, maybe you kicking the tires for the first time, seeing what the trade ideas, technology, and community is all about. And when I say community, we've developed quite the community around our award-winning and very unique technology. We offer many things. Number one, at the top of the list up here on the left, Barry's Trading Room. Trading room that has 400, 500, 600 people in it, give or take, every weekday, moderated by Barry himself, who showcases our technology and shares his trades live with the room, and shows everybody how he uses the technology and assists the room in using the technology as well. So the great thing about the trading room is the price, other than Barry, of course, zero, right? If you've shopped around and looked at all the other trading rooms out there, you know that none of them are free. They're quite pricey, but this is one of the benefits that you get when you do become part of the TI community, a trading room with experienced traders using the technology. Of course, today's Monday. It's myself and Steve for the 5 o'clock Eastern webinar. Steve, I guess it's canceled tomorrow, correct, Steve?
Yes, tomorrow being the half day, I don't think we would have much of an audience, so there is no afternoon webinar tomorrow or Wednesday.
Right. So keep that in mind. Also, ladies and gents, of course, Wednesdays is typically with Brad and Dan. Obviously, that's the 4th. That one will also be not going on. And then we'll pick things back up with Andy's Trading Studio on Thursday. I ride shotgun with him. And then Fridays, as always, we do our support webinar, which begins at 11 a.m. Eastern Time and can last all the way out till 2 o'clock. Depending on the crowd. We usually go 2.5, 3 hours, depending on the crowd there. So that's just for anything TI related. I say anything, almost anything. And if we can't answer it there, we will get you over to the right department. So Friday support session, come one, come all, 3-hour session for anything TI related. Also, we have added additional webinars. Monday through Thursday, everything from beginning, 101, 201, a little bit more advanced, 301, and then all the way to advanced on 401, which is on Thursdays. So these are Monday, Thursday webinars that you can sign up for. Last an hour and a half, everything from beginner to advanced and everything in between. So it is recommended that you take these courses in order, unless you really just feel like you've got a big wrap on functionality, and you might want to just leap to the other ones. But you can't go wrong doing this. So with these new additions and our existing webinars, that takes us up to 9 webinars a week for you guys to learn at your own pace. And of course, we always like to show how our client base has responded to the introduction of our AI technology, which first came online in 2016. You know, no coincidence here. Everybody's responded very well, and the cool thing about it, we just keep on improving it. And now there's not just one AI or one Holly, but we now have 3 AIs and are working on advanced technology to bring to you guys in the future. Brokerage Plus, all that good stuff, which won't get into detail with right now, but it's all tied to the AI. Now, you know, we've been having some days here lately. I don't think, you know, we're ready to go down, you know, start that bear cycle yet. You never know. But there's been more and more days as of late where this book right here really does pay dividends. If you've already familiarized yourself with the content of this book, which was created by myself, Steve, Andy, and Sean, about how to play the short side of the market. And we've all put our different twists on it, different patterns to look at and whatnot. But boy, there's been some days where this knowledge really comes in handy. So get yourself prepared if you haven't done so already. It's free. Just go to the link here, download the ebook, and start reviewing material in there because you never know when it's going to be time to whip out that arsenal and start going the other way. This is where we released the book. We've had some significant downside since then, and then as we navigate this range that we're occupying right now in the SPY, well, we've got our up days and we've got our down days, and so the short trades are starting to show up more and more frequently. But if you haven't downloaded the book, just do it and prepare your mind for what's to come in the future. All right, here we are at today's basically topic list, and of course, as always, I'm going to let Steve take the reins here and talk about where we have been in the daily patterns for the tracking ETFs, where we might be going, and so forth. So let me kick it over to you, Steve.
Okay, I'm ready. My desk is clean.
The trap is green. The light is green. The trap is clean.
All right, hello everybody. Welcome to my desktop. Little market recap here. The S&P 500. Looking at the SPY ETF here. Interesting day. I mean, we did go out on Friday with a very ugly candle, but this candle you can't bet on what's going to happen based on one candle. But highlighting that red candle had a big reversal day, right up trying to go to highs, and then got reversed into a red candle with a giant topping wick. Coincidentally, at that declining 10-period moving average, that was an ugly candle on Friday. So, kind of wasn't surprised to wake up this morning and see the futures had gapped the market down. And what do you know? Another one of those cases where, just like over here, where we gapped down a little bit. In this case, we gapped down a lot, but ran out of selling strength once the bell rang for the New York session. And so there really was nowhere to go but to just buy the market back by the end of the day. Obviously, super hindsight, simple to see that, but you know, in the throngs of the morning, we could have gone either way. You know, a giant gap down and continued selling. Notice the swing exit here on the 3-day low going back on Thursday is now being defined as the next level of critical support for the S&Ps here. So again, looking ugly on Friday, but kind of stick save today, kick the ball back into play in the theme of World Cup. The goalie kicked the ball back into play here, and we'll see what happens. But I'm watching this declining 10-period moving average. It did a lot of damage on Friday. It did not want the prices to close above that declining 10-period. Let's see what happens tomorrow or the next day. If we can get a close back above that 10-period, well then this, you know, the coast might be clear here for a few days. But if we don't, it just seems like, you know, the ball is bouncing down here, and this red line, this swing line here, is the floor. We'll see what this week brings. As far as activity and volumes, looks like the S&P only closed up 0.2% on normal relative volume, 1.05. If I go over to the Dow, very similar. The Dow was flat on the day, didn't do much other than recover the gap that it lost with a bit more volume, 1.47. Then we get into the Nasdaq. Oh, one thing of note here, I don't like the way the Dow is kind of loitering down here below this 200-day. I mean, ideally we had a breakdown and close below on this day, but the remaining 1, 2, 3, 4, 5 days have traded below the 200. So that's a significant technical chink in the armor when you have the Dow trading below the 200-day moving average for 5 days in a row now. So as we move on to where the strength is, it's in Nasdaq and in small caps. Small caps had a nice day. They were up almost 0.68% today. Got some of the damage done overnight and then some back. Decent relative volume, 1.31. So the small caps had a nice bounce back today as well. Looking at this chart, same kind of an idea. That swing level, look at how it goes back here. Support, support, resistance, resistance, resistance. Trade Ideas Technology did a great job here of identifying for you where the next downside pivot level is. And that's right there on that red dashed line that's labeled swing exit on the daily chart. And then lastly, again, the Nasdaq closed up nicely, also 0.67%, just like the Russell 2000. So the Russell, the small caps, and Nasdaq, the technology, definitely showed the most buoyancy today. The baton is probably being passed back to those if, in fact, we want to move higher. But looking at the cues here, what do we notice? We notice that the 50 period has been coming into play. This blue line here has been holding the price, supporting it the last few days. But we also have that crossing over of the 10 period, crossing the red 20, and we got close to it today. Let's see what tomorrow will bring. So as far as the Nasdaq and the S&P goes and the spiders, I'm watching the price action and how it behaves at this declining 10 period moving average. The Qs have a much higher head start than the S&Ps do, but let's see what happens if they do get caught up in that net, as I call it. If we are in fact in trouble for the bulls, then that moving average is going to start to bring out a lot of sellers. The other thing of note is we have a tiny little gap down here back from last week. If the bulls continue to want to march higher, that gap very well could be filled, and I'll just mark that up right there. So if we have further to upside tomorrow in the Nasdaq, that could be a level to be watching for. That would be an official gap fill. So that's it for the most major, the four major indexes that I like to follow. But real quickly, I did want to click into the banks here, regional banks and the national banks. They were in the top 4 of my sector strength heat map today. So airlines were strong, technology, and also the banks. That's a good check plus for the bull side of the balance sheet here. You want to see financials hanging in there, and Goldman Sachs has been really having a hard time lately, but look, it's fighting like crazy. And once again, Trade Ideas Technology has drawn the downside support level here, labeled it the swing exit. But for 4 days now, Goldman has been bouncing off that level for the most part. So, the financials and the banks, if we're going to come out of the little weakness we've had here in the last week or two, it would be good for the bulls to see the financials and the banks lead higher, and they did in fact did that today. So I wanted to highlight that before I passed it back to Jamie. That's all I got. Yeah, thank you, Mike. Let me just take a look. I also talked about Italy. Italy kind of had a stick save today over there. No real concern, but I've been tweeting and talking an awful lot about Credit Suisse and also Deutsche Bank, the world's largest derivative holder. There are gaps like this because these are European banks, and so the European banks were not looking too good back here 3 days ago, but they're off their lows as well, and I'm certain that's obviously translating over into our markets as well, because if these things were making new lows today, I can pretty much guarantee you we wouldn't have had a big green bar like we had today. So the financials definitely held, propped the market up today, and that's all I got. Back to you, Jamie.
Good stuff as always, Steve. Hold on 1 second.
Muted.
And there we go. Okay, so just taking a look at the syllabus or the itinerary today. And so expectations-wise, walking into today's session, and especially after the first 15 minutes, not so hard to find your footing today. We had kind of counterintuitive signals from the way that I like to sum things up. You know, substantial downside count in my compare count windows for the first 15 minutes. Let's just take a peek at what those guys look like. So, you know, and keeping in mind, let's see, what do I have up here? Fives, okay. So after the first 15 minutes, which is this red bar right here on the 5-minute time frame, you know, we didn't really get a lot of useful information here. Big sell, you know, big time high volume selling, a lot more than buying in the first 15 minutes. But let's focus on this next little point right here. Know your surroundings. What are you walking into each and every day? Because like it or not, you know, we are going to be confined by what the SPY and the daily is telling us, whether it's the SPY, Dow, the Qs, whatever. So coming into today, you know, we opened up, you know, significantly lower, and, you know, not a whole lot of room to the downside here. And of course, you know, once we put in these lows right here, we never saw any new lows, and it was just kind of a, you know, a sucking sound as this gap was filled. But it sure wasn't an easy trading day. It wasn't real obvious. You know, we had these guys telling us, well, you know, look out for additional downside. Certainly, we don't look at readings like this and go, oh, better get ready to get long, right? Especially knowing that we're butting up to this little support level right here. So when I say, you know, I saw a lot of counterintuitive signals, my bread and butter tickers or my bread and butter compare count windows, which are usually pretty accurate, throwing us a curveball today, first and foremost. Secondly, what were the Hollies up to? You know, there wasn't really an identifiable bias. We had one of the versions, and if we just take a look here real quick, let's take a look at Holly Neo and look at the trade blotter here and sort by time, right? What did we see from Holly Neo? Nothing but stacking longs, right? Which was the right direction in the end, and we can see risk off 32 cents for Holly Neo, but risk on $2. Quite a difference between 32 cents, a little over 6x. And the equity curve here is certainly interesting. It kind of reminds me of some stocks that I've seen as of late. Just, you know, meandering along, consolidating for most of the day, and then wham. So eventually we'll be able to expand on these charts and hone in on the activity a little bit more. But from a, you know, bias perspective, we had Holly Neo attacking on the longs. Let's just take a peek at the others. Right now we're going to be looking at Holly 2.0, which was a lot more active. And what was she doing in the opening hour? Didn't start kicking trades out till about not quite 45 minutes into the session. But look, we had Neo stacking the deck long. We had Holly 2.0 stacking the deck short. So we also had kind of opposing signals from different versions of the AI, while at the same time having heavy sell volume kicking in the first 15 minutes, right? And, you know, then pretty much a reversal. So if we were surfers, I mean, the wind was blowing this way 1 minute, it was blowing this way the next. 1 minute the waves were 4 feet tall, the next minute there was just flatness and chop. So not the easiest day to navigate. But having said that, still some interesting opportunity out there, as there is each and every day, regardless of market conditions, regardless of market direction. There's always something out there that is working. It's just that when we're presented with these types of conditions, not so easy for us humans to have conviction one way or the other. And, you know, a lot of times it's easy to get caught in the chop where we go long, get stopped out, or we go short and get stopped out as well. So just an overall kind of difficult day to navigate. But let's take a look at some of the risk on and the trade around examples that were present in Holly today. I guess we could start with 2.0 here. Why not? As always, a couple of good examples, a little bit of everything here. So let's just take a look at AZPN today. And by the way, let's see. And there's one in here that, yeah, the TVPT was interesting as well, because once again, conflicting signals today. It seems to be one of those days where you don't just see one or two, but this one makes kind of weird thing number 3 that I saw today, and we'll talk about that one in a minute. That was a short by Holly, but also triggered by 2 of my favorite bread and butter windows to the upside. All right, so once again, another good case of mixed signals, but we'll save that one for just a minute here. First off, let's just go through the Holly compulsory 101 and talk about risk on versus risk off. Of course, we can see her performance risk off on Holly 2.0 today was down $1.08, but holding everything, you had potential of 2.0 or $2.03. This looking very similar to Neo's yield curve, except this one was down considerably more before she got to the green. Neo was more of a flat line. So let's take a look at the example of going risk on AZPN and just helping to demystify. No, you don't have to pick, I'm going risk off or risk on before the session starts and stick with one. We can address this on a trade-by-trade basis. Easiest way to get used to it. So here we're looking at AZPN. 9:52 was the time, a little bit later in the day here, and we see Holly recommends a buy signal right here. Now, why was the trade closed? Well, we look at the exit reason right here. Time to exit, close to a cross, one of the newer strategies that's been cycling through the Holly strategies. So, close to a cross. We don't have to squint our eyes or imagine too hard, but we can see maybe close to a cross between, range break. We'd have to really get in there and kind of examine the nuts and bolts of that, but that's what jumps out to me at first. And we look at close to a cross, and we can see it's designed around a 2-hour intraday hold time, 120 minutes. So this one went the duration. Nice behaving trade, not a whole lot of pain there. As soon as the signal is generated, we get a nice little march to the northern side. Never even acts like it's going to come down here and stop us out. Free and clear the whole way. And we can see the shaded area here is Holly's time that she spent in the trade before that time to hold expired, and she closed the trade out right here. Now, when we see Holly closing the trade, if we like what's going on the chart, we can choose to stay in the trade, even though she's getting out, and say, okay, I'm going risk on. I'm accepting more risk because I think this chart might have a little bit more, and I think I can make more than what Holly's pulling out right now. And of course, we can see here, 44 cents is what she took, but by the close, could have had right about double that amount, 44.88 cents. So a good habit to get into, assuming we like what's going on with the chart. This was a healthy uptrend. It's taken its pullbacks, but it's hitting higher highs each time. Does its thing here, comes back up, and eventually closes at highs. So we can easily make the choice. We're in 200 shares with Holly, say. What do we do? Okay, I see Holly's getting out. I kind of think there might be some more meat left on the bone here. We're going to close out for 100. We're going to take our $44. We're going to keep this one, and we've got 2 options here. We can either A, stick to our original hard stop, because we still have to manage risk, or what a lot of people like to do is set the stop loss for the second lot at break even. This one would have succeeded, and you could have tacked on substantially more on the second lot, but there's always the chance that it fails and rolls over, right? If that's the case, you get stopped out for right at flat, maybe down a nickel or whatever. By the time the market order gets you out, if you're not in the chair, you still made money on the first lot. The overall trade is still profitable, and that's what we're here to do. Knock out consistent profitability, manage risk accordingly. So a great example of a risk-on trade today in the AZPN, simply staying in the trade longer, accepting a little bit more risk, and of course managing what you've already taken and your open position accordingly as well. A lot of the times too, we can get a little peek and go, well, where are we in the daily to help us try and decide? Well, if we're going to stay in for a little bit more, where are we going to run into some headwind here or some resistance? And this little guy just didn't get quite to the tops of those wicks, but certainly the body got a little bit bigger than the other guys here. So that might be a pretty good indicator that that one's run its course and it's time to take the cookies off the plate. Now let's take a look at something different. We can see here RBS, which was, wait, wrong stock there. WBS.
You got with him, Jamie.
I know. I was looking at the Mo, which was a good trade, by the way, on a couple different fronts here, because the volume was so high in it. But I don't want to jump the gun here. I want to look at UBS because we're showing a loss on a reduced risk and 40 cents on risk off. So this isn't necessarily a trade around. I guess it could have been, depending on when you were turned on to it. But, you know, on this entry, what do we get? We get a little up move and then a gyration south, right? Now, Holly has the option to get out of a loser early and not let the stop hit the longer the trade is open and it's not doing what it's supposed to. That's where reduced risk and profit save come in. You know, those are her two options: hard stops, timed exits, and profit targets are the hard-coded. These are when she can call an option and get out of a winner or a loser a little bit early. And that's what she does on the WBS, and 15 cents was her loss that she took, getting out somewhere right in this area right here. And then what does it do? It gyrates on down to that stop loss, and let's see here. The lower that candle, 63.71. Stop loss was 70. So this is one of those rare occasions where you just barely avoid getting stopped out by a penny. So the stop did not trigger, right? So let's say you did not see this trade when it was issued, because Lord knows, with 3 Hollies, we've got our hands full right now. Typically, people just pick one. It's kind of their favorite right now. Some people flop around, but bottom line is there's probably a lot of signals that you don't see when they come out. So it's always a good idea to scan through everything and look at, not only hopefully you're in some of the ones that are green, but it's always a good idea to look at some of the ones that are down or close to getting stopped out, because sometimes you can get a more advantageous entry, right? How many times have you been in a stock only to be stopped out, and that's exactly where the stock turns and decides to go back up? And, you know, even though this one didn't quite get there today, you know, if you saw this trade open and you're like, wow, it's just dancing right down there by the stop and never got stopped out. These are 5-minute candles. It puts in its low, and you're like, hey, you know, it looks like it's firming up here. I can get a much better price than Holly, take a lot less risk than Holly, and look what would have happened, right? So this is a great example of a trade around. Holly's down in it, hovering at the stop. Sometimes they've even been stopped out, but then you might pull them up on the daily and go, well, man, the risk is really low now. You know, the timing, in essence, is even better than when Holly first called it out, right? Because it all boils down to timing, right? So keep that in mind as you interact with Holly on a daily basis. Look at the ones that are hovering right around the stop areas, maybe slightly past, and if you can identify some nice, tight, cozy support on the daily and take and get a better price than Holly and accept lower risk, well then, even better. All right, so I see Steve is doing a good job at keeping the questions answered there. So we will continue here. Let's go ahead and talk about Philip Morris today, because not only was it a beautiful, beautiful Holly signal, as we can see right here to the short side. I really like what's going on here, because we had put in the highs up here. We've got this nice little range that's presented itself, with that wick there representing the low in the opening 5 minutes, high up here. Nice tight little range here, and then whoosh, Holly calls a short right as that range is being broken, and we get a nice push to the downside, a little rest, and then a continuation. Now, at the time, it looks like Mo, what do we usually do on the 3-month? Looks like on the 10-day, we're doing about 7.5 million. We finished at Well, it looks a little low to me, but we're showing relative volume 1.05. In any case, not the lightest volume day for Mo, but on this crucial area right here, volume was pretty high because it was also at this same time coming through my turbo brakes down window, which looks for new lows with accelerated 1 minute volume. So I always like it when I see things like this. I see Holly, boom, shorting Mo. I see Mo streaming through here at the same time. It's like a double confirmation, right? And especially coupled with this nice, beautiful tight wrist pattern, we get that initial down push. You know, we get back up here to the entry line, hugs it for a little bit, but then presents another great opportunity when the seller comes back out over here and gives you a really good opportunity to leverage the position a little bit further and get a nice little push down to here. Of course, what's going on the daily once we get down there? Some pretty identifiable support levels here, which can be very beneficial in helping us decide when to get out of the trade. Exactly what we were doing to the upside earlier, but on this, you know, on this one, completely opposite, selling the stock for the move down and buying it back cheaper on the short side. So a really nice little signal in Mo there today. All right, still doing good on time. Let's go ahead and take a peek at some of the Neo trades as well. Segment, there we go. I really will like it, Steve, when we can see all of these at the same time.
Yeah, I'm right there with you and everybody else.
Now, let's go ahead and talk about that one I was talking about earlier. So, dang it, I switched back too quickly here. Don't want to forget about that one. It was this TVPT, which was another strange thing kind of swimming against the current today. Once again, a perfect testament to how kind of hard it was to pick a direction today. TVPT was identified by Holly as a short sell right here. But earlier in the day, I had seen it coming through not only my turbo up family no resistance, but this thing was very dry today. And it was one of the only things coming through, you know, not near as active as it usually is, because, you know, this is from, stretch my time column out here, the hit started right here, and this is the entire history for the entire day right here. So what was coming through? DRI, UGI, TVPT, all right? Just happened to be a Holly short trade, but why are they coming through here? Because they're hitting an intraday high, and they're hitting all-time highs. And there has to be volume attached, or they won't come through here. So if we look at TVPT, I mean, all day it was rocking a very healthy relative volume number, not only coming through TVPT, but also coming through one of my other new favorite windows, which was the bullish daily candlestick window as well. So once again, conflicting signals, but on something like this, you know, typically I have to go with the volume, right? The direction in which the volume is in. So just another good example of a wishy-washy day, and one of the short plays that Holly was calling just happened to be coming through two of my extreme volume tickers. It was probably coming through Andy's extreme high-low pro as well. And we don't see that very often. I can't even remember the last time I got a conflicting signal like this. But when it does happen, it's interesting because you typically have to err on the side or the direction where the volume is happening. And it was clearly on the upside today. So it might be a pretty interesting one to keep your eyes on moving forward. See if that volume continues, see if the upside continues, or maybe it's ready to take a break and regress back down to this little, what could be a future support area. But interesting one nonetheless. Yeah, Debbie, that one is, all you have to do to get any of those windows is go to channel 4. You're going to see the daily bullish candlesticks in there. You just have to right click and save it to your cloud. Should get you there pretty easily. All right, cool. All right, so good examples of risk on and risk off. Let's, we never did get over here to NEO, which I do want to showcase a couple of NEO trades here, so let's do that. All right, so we did have a dual signal today. Different strategies, both triggered ADMP. We had the first one from looking for a bounce right here, which looks like it caught the bounce really nice. And then about, let's see here, that was 13 minutes later, Count de Monet triggered it right here. And both of the signals worked. So on the first one, 16 cents, because Holly's time to exit ran the course, looking for a bounce, only has a 1 hour hold time here. So this is just textbook, right, on going risk on, in my opinion, because we get the first signal here, maybe we didn't take that one, maybe we see it come through again. Even if we took that second signal, we got a little bit worse of a price. But wow, what a nice controlled up move. You know, seeing Holly exit the trade right here as it starts a new tier wouldn't have been that far of a leap to, you know, say, well, based on what it's done thus far, I'm going to peel out a half with Holly and keep the rest, using this area down here as our stop loss, or converting back to a break even, in which case would not have been hit. And, you know, a nice spread between risk off and risk on here. Almost 60 cents, 59 cents on this one, and then 20 cents on the second entry. So a nice double entry that worked on both of them, and a very rich spread between risk off and risk on here, and a very low risk and easily definable. I won't say that, well, trading, I should never really use easy in any capacity. But when you look at a chart that is this flat and you can easily assess, well, Holly's getting out here, tell you what, I'm going to stay in, keep that second lot for break even, or even at the lows of these candles, the tops of this little area right here, more of the same thing. What was resistance is now going to act as a little support area and then move higher. So, you know, really great spread here. And what I always like to say is, who cares if you got an extra nickel, an extra dime, an extra 20 cents? You'll get bigger and bigger pieces of this spread the more and more you get familiar with the process. But believe me, nickels, dimes, 20 cents here, 20 cents there, add up big time in the long run. You know, even if you make an extra few pennies on every trade, that's huge on an average basis. So just keep that in mind. Every once in a while, we'll get lucky and get out right at the top. Every once in a while, we'll get lucky and cover one of our shorts at the bottom. But just getting a piece of this spread, assuming you're comfortable with what the chart is telling you, can really add some dollars to your bottom line. All right, so what other windows were in play today? Now, typically on a day like today, where we saw a massive downside count, there would need to be a little bit of room on the SPY or on the daily chart, and there wasn't today. And you know what? My turbo breaks down, which is usually showing me at least 5, 10 good setups a day. If you look through all these guys today, what you're going to find is that was pretty much either the bottom or pretty close to the bottom. Like I said, only one good tight setup came from there today, which also was Holly the AI play, which was the Mo. The only one that looked any good whatsoever was Tesla. And, you know, depending on your risk tolerance and whether your nerves are very good about sitting massive wiggles, Tesla was the only one that I identified that had a decent range breakdown where there was any room in it, where it actually did anything. If we were to go through all of these plays today, we would notice that a lot of the times, well, this one actually worked, but it was a little bit on the thinner side. But if we go back to like 30 minutes after the open, 7 o'clock my time, which is, you know, usually when I start looking at these things, what we'd find is they were all bouncing right at that time. Let's just take a look at a couple here to help illustrate what I'm talking about here. Go down a little further. Right, and make sure we're on the right day here, which we are. So if we start looking at all these guys that were popping out here, you know, we're seeing little bottoms like this, and we either got this or something even more severe. But, you know, we just looked at two, and they're pretty much identical. So a lot of these that were coming out at the exact time that I start to look for these things, they were just showing either bottom ticks or close to it, somewhere in this little area right here. So once again, another example of the data not unfolding the way it usually does. And, you know, of course, when I start seeing these things, what is that telling me? Well, these patterns aren't looking like they typically do at this time of day. Could have something to do with the neighborhood that we're in today, which I guarantee you, this is what was really defining the hand of the market right here. Is, you know, we've had this nice little rambunctious amble down, and, you know, clearly the market finding its feet after a saucy little gap down today. So they kind of took all the downside action out for us, and then what we were left with were things like this. Typically when things are setting up to the downside, we were getting a lot of bounces off the bottom. All right. Now, we already talked about the TVBT. Now, I also want to talk about bullish daily candlesticks one more time, because looking at these guys today, especially coming into a gap down day where there might be a little more uncertainty than normal, this is quickly becoming one of my more favorite windows. And of course, we have to give proper credit to Mr. Andy Lindelof, who built this thing. So, you know, if we just start kind of taking a look at these guys, a lot of these were just, boom, little runners right off the bat today. Of course, that's pre-market. Actually, no, that's market open. I was looking at the wrong cell there. So, you know, 4 minutes into the market, we get BRFS on a bottoming tail. You know, we can take a quick look. We got the gap up there, just straight up. Not a whole lot of pain if we were to have traded that one. Let's see, what was the other ones today? And this is also the one, of course, BRFS repeating. CRON was on a doji formation on the prior day, right? So the great thing about these is that your ultimate downside is already defined, right? And a lot of these things just sprung up immediately today. BRFS, CRON, where's our little friend there? Let me show you where it showed up again as well. TVPT, once again, getting the signal here, right here. And of course, if we take a look at some of these other ones, we're going to notice the same thing. Usually a nice little opportunity to get out. Whether they keep going or not is another matter. But clearly having the downside mapped out for us on the daily is a plus. And typically the risk is pretty low on these things. Of course, everything's going to be a little bit different, but highly impressed with the patterns and the plays that have been coming out of this thing. And as I just stated earlier, this window, along with all of my favorites, Andy's favorites, Sean's favorites, can all be accessed by just cruising down here and going to channel 4. And there you have all of them. So as soon as you find the right one, like bullish daily candlesticks right here, you can expand it, check it out, make sure you're going to like it, and just right click and save it to your cloud. And then you have it. This is what we're doing now instead of passing out the cloud links that we used to circulate because they kept getting corrupt. And now, no more of that. You can come right here, get the things you need, and be on with your day. All right, so once again, some decent plays coming out of my favorite windows, just few and far between today. A lot of weirdness going on in the market, a lot of contradictory signals, not only to market volume, but we had some in the AI in some of my favorite windows. Steve, did you have something to say? I thought I heard
no,
you.
I just went off mute and kind of made a noise.
There we go. Okay, so one thing I'd like to, one other little thing that I want to put in everybody's mind here is to not forget to scan all the Holly plays. and look out for interesting daily patterns here. So let me just click back over to, I think, the layout that I was on. And it goes a little something like this. Let's see, we're on Holly 2.0. So it's always a good idea to do the following. At the end of the day, what are we going to do? We're going to look through all of Holly's plays, and we're going to check out the dailies and see if there are any that we might want to set price alerts for. And of course, everybody's a little bit different. You know, Cryo Life kind of sticks out here because, well, of what it's doing on the daily. It's not at all-time highs, but it sure looks like it's, you know, trying to find a little home here, and who knows, in a few days, if it gets up to the top of this candle. It tried today, didn't quite get up there, but if we get above this candle right here, and I believe the high 28.65, so I'm going to set a price alert, 28.66. Holly play. So we did to make a note, so you remember why this price alert. Boom, tomorrow, maybe we, you know, gyrating higher in the market, maybe we're down, maybe this one's just strong, you never know. But, you know, when that little level gets broken there, if it presents a nice cuddly pattern on the daily with low risk, that might be a really good trade because it might want to get up into this region, stock, you know, build this little base camp before it goes and attacks all-time highs again, right? And of course, everybody's going to be a little bit different, but you know, we're going to see a lot of very similar patterns here. And we can do the same thing with AZPN. It's just in its little box right here, but as soon as these wicks get penetrated, as soon as that on this one 95.74 area gets penetrated, it might be worth taking a look at here. And hey, all it takes is one good one. And if we go through here, we certainly have no shortage of candidates these days with 3 different Hollies, right? Used to be able to breeze through this pretty quickly when we just had one, but now we've got 3. Sometimes we'll have some double up, but a lot more things to take a look at here. So just do yourself a favor. Go through and do exactly what I'm doing here. If you don't see anything, you don't see anything, but a lot of the times you see something that's interesting. The only reason you're setting that alert is because Holly the AI brought it to your attention. So in other words, it allows us to leverage the signals that we're already getting for future trading sessions. Yeah, Tony, I'm reading your comment right here, not really getting the full benefit of having 3 Hollies. Right. It's almost, it's very hard to keep up with everything that's going on because we don't have a way to view all of them. But fear not, that is in development right now, and we will be able to see all of the, you know, all of the signals simultaneously, or have 3 different all trade plotters or 3 different AI strategies up in the future. And of course, that's not all that's in development for Holly. You know, we've got a lot of cool stuff coming up. Don't have time to go into detail about it right now, and that's usually what the Wednesdays with Dan and Brad are for. Unfortunately, that one will be canceled because of the 4th. We'll all be having some drinks and popping some fireworks, eating some barbecue and whatnot, but hey, that is also a good day. All right, we're just about at the end of time here. Maybe we've got time for 1 or 2 charts if anybody wants to chime in there with a symbol. Anybody? Halliburton. All right.
Oh, Jimmy.
One of the great military-industrial complex titans. So that is, yeah, HAL. Well, Steve, here we go with the daily, which, you know, Halliburton.
Yeah, there's definitely a reason to look at this level for support today. I think if you put today's lows on the radar as a possible downside stop, it looked like it tried to lift the rug on the opening bell and see if there was any stops to run, and didn't quite get any. So there could be a relief bounce in Halliburton. There's definitely long-term support going back on the history of this chart for sure. Yeah. Halliburton.
Yeah, not too shabby. Interesting to see what it'll do on the morrow.
And GBR, I have no earthly clue what this is going to do.
Well, you know,
It's
the
been surprising
AI.
us for 3 days in a row now.
Now, the AI just decimated this, not only on the long side, but didn't it throw a short out there the other day?
It may have on the first day, but now back to Tony's question. It looks like he's taking a stand, doing what. There's a lot of guys out there. They call it shorting junk, shorting the wood, dead wood. You know, let these things run for 3 days insanely, and then jump in and try and find a borrow and borrow some shares, and try and ride the inevitable back to earth type of price mentality here. So that being said, with that being known, Tony, I'm looking here at my intraday 15-minute chart. I see a lot of levels right there above 11. I don't think I'd want to see this thing get back above 11 again. I'm breaking it down on the 15-minute chart, so I'm just kind of seeing where the price did go through that level today, but you know, it seems like there's a lot of candle wicks at that level, both in the morning and the afternoon, that couldn't quite get back above 1090, but I'll just round up and call it 11. As long as it stays below that, you might be in control for a day and a half, 2 days at the most, but don't overstay your welcome.
Exactly, exactly, and that's, you know, that's one that the AI picked up long, and then well, there were a couple of different huge winners. We got long one, and then it shorted one the next day, and made good money on it. But is this the one that was up? What was the one Friday that was up?
Yeah, it was this one. That's this one.
Yeah, yeah, okay. So yeah, 40-something% risk off.
The buy tag there on the chart.
150% up, risk on. Yeah, and who knows when the energy is going to come out of New Concept Energy, no pun intended, or pun intended, I should say. Yeah, so crazy on that one. All right, everybody, that is the end of the content. Thanks, everyone.
Unmuted.
And for those of you who might be thinking about upgrading, or if you're new and are about to punch your ticket and sign up, Scott's got some discount codes and tell you about a big promotion we've got coming up 4th of July. So, Scott, if you were there, ready for you?
Yeah, thank you. Let's put the slideshow back up and go through the last couple. Something to keep in mind on the way out is we do have a podcast. There was a new one up this last Friday, so make sure you're subscribed so you can grab it. We'll have another one up this next week. Just search for Trade Ideas Podcast in whatever apps you use to listen to it in, and make sure you're subscribed to get all the new stuff. Download the archives. Get your brain filled with Trade Ideas info. We have a code that's good this month. You can save 15% off your first month or year of any Trade Ideas subscription using AlphaWave, all caps. You can also use this to upgrade if you're a subscriber and want to get into premium. Just log in from the homepage, click in the upper right to log in, and log into the account management section, then select the Change My Subscription link from the right, and use AlphaWave when you're changing your subscription to the premium version, and you'll save 15% off that first installment. We'll have a recording of this up later on tonight or tomorrow, and you get a reminder tomorrow about how to find that. Thanks, Steve and Jamie. We will see you guys after the holiday.
Yep, thank you.
Thanks all.
Have a good holiday.
Yes, everybody have a great one, and we'll see you guys on the flip side. Bye-bye.